Hello folks, this is Sam Payne with Payson Financial for our September 2014 Educational Economic Update. In this month's video, we'll be discussing a couple of the economic events that occurred last month and provide some insight into what they mean for you as an investor. Please stay tuned at the end for required disclosure statements. September was a solid month for the U.S. economy. The labor market continued to improve, and the latest second quarter GDP estimates showed that the economy grew 4.6% in the second 3 months of the year. Most importantly, the growth was shared across multiple sectors, which is a very positive sign for the rest of 2014. With the economy on firmer footing, analysts are paying very close attention to the Federal Reserve. The Fed held an open market committee meeting in mid-September, and when they were done reading the economic tea leaves, they voted to maintain the pace of their tapering and drop their monthly bond purchases to $15 billion. This meeting was pivotal because it was the second to last meeting before the scheduled end of the Fed's historic quantitative easing program. By voting to maintain the taper, the Fed boosted confidence that the U.S. economy is doing well enough to take off the training wheels. The next move is interest rates, and the question on everyone's mind is how long until the Fed raises rates. Speeches by several of the open market committee members show that there are different opinions on the subject. Some officials want the Fed to raise rates as early as spring of 2015. It's earlier than most analysts had predicted. On the other hand, several other officials believe that the Fed should be extremely cautious and raise rates only when the Fed is certain that the economy has achieved enough momentum. These folks seem to favor leaving rates low until early 2016. Such disagreements are healthy because there is a lot of room for interpretation of economic data and debate about the effects of economic policy. However, these splits mean that Fed Chairwoman Janet Yellen must craft a careful compromise or risk a public break that could cause volatility in financial markets. Why do interest rate changes matter to investors? Well, the Fed has held interest rates at rock bottom levels in order to encourage lending and boost the economy. Now that the economy is improving, the Fed will need to slowly raise rates to avoid high levels of inflation, which negatively affect the economy by chipping away at buying power. If the Fed raises rates too soon, the economic recovery could falter. If rates are left too low too long, inflation could spike, causing the economy to overheat. To bond investors, rising interest rates will affect the market prices of bonds in their portfolios. As interest rates rise, the bond prices fall as new bonds paying higher rates come to the market. As financial professionals, we spend a lot of time managing these issues for our clients so that they are prepared for rising rates. Bottom line, we know higher interest rates are coming. We just don't know when. The good news is that the economy is doing moderately well, and the signs favor continued growth this year. Looking ahead, investors will be turning their attention to the release of third quarter economic and corporate earnings data to see how the quarter stacked up. We're also approaching midterm elections, which can often exert some pressure on markets as investors weigh how certain results may affect government policies. Well, that's it for the September Educational Economic Update. If you have any questions or concerns, please give us a call at our office at 888-285-5859. Here are some upcoming events that we'd like you to know about. In October, we will be having a series of Social Security educational events. They will be held at the Temecula Public Library located at 30600 Palba Road. 2 events will be held in the evening, the first Monday the 27th and the second Thursday the 30th, both beginning at 6 p.m. In addition, we will have one Saturday morning, the 1st of November, beginning at 10:30 in the morning. If you are interested in attending any of these, please be sure and RSVP by calling the office at 888-285-5859. Once again, this is Sam Payne with Patient Financial signing off for the month of September 2014. If you have any questions about what you heard in this update or would like to discuss your personal financial situation, please give us a call. We'd be happy to talk to you by phone, or, as we are doing with clients more and more, via video call. While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. The economic forecast set forth in this presentation may not develop as predicted, and there can be no guarantee that the strategies promoted will be successful. Please consult your financial professional before making any investment decision. These are the views of Platinum Advisor Marketing LLC and not necessarily of Sam and Debbie Payne, Center Street Securities, or Brookstone Capital Management, and should not be construed as investment advice. Neither Sam Payne, Debbie Payne, Center Street Securities, nor Brookstone Capital Management gives tax or legal advice. All information is believed to be from reliable sources. However, we make no representation as to its completeness or accuracy. Please consult your financial advisor for more information. Please be advised that presently Sam Payne holds FINRA Series 6 and 62 licenses in California and Texas. For residents of other states in which registration is not being held, proper licenses and registration must be obtained by Sam Payne before proceeding further. No part of this communication should be construed as an offer to sell any security or provide investment advice or recommendation. Securities are offered through Center Street Securities, and they will fluctuate in value and are subject to investment risks, including the loss of principal. Investment advisory services are offered through Brookstone Capital Management, LLC, an SEC-registered investment advisor. Debbie D. Payne, Samuel F. Payne, Patient Financial Insurance and Financial Services are all independent of Brookstone Capital Management.